Hey folks, this is Tom Nash, and I'm going to explain today why Palantir at 600 PE is an extremely undervalued stock and still in 2025 somehow completely misunderstood. Now right now Palantir just hit $140 per share as of the making of this video. With the way Palantir behaves, it might be 70 or 240 by the time this video comes out. Doesn't matter. Doesn't change anything that I'm going to say today. The stock down 500% of the past year, 1,400% since we started talking about it back in 2020 with the DPO. The stock has made me and my community a lot of money. It has punished a lot of traders, a lot of dialers, a lot of haters, a lot of shorts. Nothing changes. It's going to continue to do the same thing. Reward the patient investors and punish the doubters, the haters, and the opportunists, basically the traders. Now, in this video, I'm going to explain why still today, despite the ginormous PE ratio of 600, this is still an extremely undervalued stock. At the end of the lecture, I'm going to share with you my new and updated price target for Palantir for the next 5 years. I'm going to give it away for free, no paywall, not posting this on my Patreon, not posting this on my Academy. Everybody will see it today. So don't click nothing, don't smash nothing, don't buy nothing. Let's get to it. And let's start with the first thing on the agenda today, okay? So, we have established, I think, over the past 5 years, and this is a little bit of a lighthearted opener to the video, that Palantir, despite all these so-called experts, is not a $5 stock after all. I think we can all agree to the same clowns that have told you that Palantir is a $5 stock. They should switch professions. They no longer should be doing any stock analysis because they have cost you, if you listen to them, a lot of money and missed opportunities. I think we also established the fact that Alex Karp banging on the table during a conference call was not a big deal after all. In fact, it's just Alex being Alex. I think we also established that a lot of experts will never engage in stock analysis in the public domain again, having destroyed their reputation on the stock. And also think that the main thing here to take away is that if you was patient with the stock, if you had discipline, if you put your emotions on the side and was just cold, logical, basically Russian, and you basically approach this thing as a business decision, you ignore the noise, you tune out all this stuff that were irrelevant, you have made a lot of money on the stock. And right now, I'm here to show you there is more money to be made here, but I'm also going to be talking about the high PE. I'm going to be giving you a way to manage risk and reduce risk in the short term. If you're holding Palantir and you're thinking about selling, you may be nervous, I have answers for everybody in today's video, whether you are a new investor, an existing investor with a lot of money, or you're thinking about getting a position on Palantir. Let's go through the numbers. Let's go through the data. So, Palantir is at 600 PE right now. That is a fact. Now, the first thing I want to explain here today, that's kind of the misunderstood point about PE ratios. Price to earnings ratios, right? I have my share of doubt about these ratios in the past, but nevertheless, I accept the fact that they give an objective way of looking at companies. Even though I'm not the biggest fan of PE ratios in general, I've been on record many times saying that PEs don't matter, right? If you are going to look at PEs as a way to put everybody in the same playing field and compare companies, sure, go ahead and do it. But just understand one thing. You should be looking at forward PEs, not current PEs. The name is misleading. Current PE talks about the history. Forward PE talks about the current situation. Forward PE is basically what the company right now is expected to deliver, versus current PE is what happened a quarter ago, a year ago. It does not matter as much as forward PE. So when you're going to be looking at PE ratios in general, if you are so inclined, please look at the forward PE, not at the current PE. The forward PE of Palantir is still inflated as hell. 284 PE, that is insane. It is a very, very, very high PE. I'm not going to be blowing smoke up your bum trying to sell you that 280 PE is somehow a reasonable PE. It's okay. No, it is extremely expensive. This stock is extremely expensive. It is selling at uber extra premium prices, no doubt at all. But on the same playing field, we have to acknowledge why this is happening. Is this partially because of hype? Sure. Is this partially because of traders essentially blowing the smoke and creating this insanity right now? Sure. A lot of this has to do with the traders and all the noise around the stock. Sure. But about 70% of it is actually justified. And that 70% comes from the fact that this is the #1 company in its category. In fact, they have completely monopolized the software infrastructure of AI. If you're talking about large language models becoming pretty much a commodity, if you're talking about energy right now being big and data centers and chips, those are, with the exception of NVIDIA's GPUs, which are almost as monopolistic as Palantir's AIP, everything else is a jungle right now. Everybody's competing for their little piece of the pie. NVIDIA has GPUs in the stronghold. Palantir has the operating software in the stronghold. No matter which LLM you choose, no matter whatever AI you want to implement in your business, AIP is going to take it and supercharge your business with it. It's absolutely industry agnostic and LLM agnostic and AI agnostic in general. And there is nothing else. Tina, this is literally the only show in town. Okay, let's move forward. So, let me, not hating at all on Honda Civics. I think they're terrific cars. I love them. They can last you 20 years easy. Wonderful cars. But a Honda Civic is going to cost you about 30 grand, right? Depends on where you're going to buy that, right? A Model X Plaid, which can give you insane performance, is going to cost you 100,000, give or take. I'm just giving rough estimate numbers, right? If you want to buy a supercar, let's say a Koenigsegg, which is a Swedish supercar brand with the world's best cars, you're going to be paying $2 to $4 million. Okay? The difference, this is a car, this is a car, this is a car. Is Koenigsegg expensive? Yes. Is it massively over the top? Yes. Does it cost a lot more than the Civic? A lot more than Tesla Model X Plaid, which is an insanely good car? Yes. But this is a Koenigsegg. If you look it up on Google, you'll see what I'm talking about. These cars are out of this world. You're getting a unique product that is nothing like anything you've ever seen before. Now, you pay extra for premium. Sure. You pay extra for elite, for the best in the business. And Palantir is indeed that supercar. That is why it's going to cost you $2 to $4 million. It's not going to cost $30,000 because it's not delivering the same value. In the case of Palantir, that value is not the driving experience. That driving experience is good for cars, but in our world, we're talking about the world domination that is coming down the pipeline with Palantir. Essentially, what I was saying for the past few years, Palantir is about to become the world's most important software company. That sounded insane 5 years ago, still sounds kind of half, not really plausible today, but in 5 years, this is not going to be even a thing of challenge. I mean, it's obvious where this thing is headed, and still a lot of people refuse to read the tea leaves. And that's okay. I'm not here for everyone. I'm here for people who want to learn and who want to understand this. Now, for those who are numbers obsessed, I get it. The story is phenomenal. And one of my greatest idols of all time, Ashwath the Modran, always talks about the combination of the story with the numbers. Just the story alone, not good enough. The numbers alone without the story, not good enough. So let me show you. I've talked about the story, right? What about the numbers? Even the numbers are elite. Elite. Right now, Palantir is giving you 92.5% net income growth per year. Okay? Almost doubling its net income every year. It's giving you a free cash flow of 105% per year. Okay? This is insane. $1.3 billion. $1.3 billion every year of free cash flow. Sales are growing insanely. Cash is growing insanely. 40% cash growth, 80% gross margin, and rule of 40 of 80. Now, rule of 40 of 40 is elite. Rule of 40 of 80 is a car that does pretty much 0 to 100 in 0.8 seconds. In this example, this is supercharged. There's not a lot of companies that can give you these numbers, all of this. But the thing is, it's not just these numbers. It's not just that. If it was just great fundamentals, so be it. But it's the combo package of this whole thing, right? And people are going to say, well, Tom, you're just hyping it up. It's like, Tom, you're getting paid by Palantir. Have you seen the share price? I need to be paying them. They've changed my life. They changed a lot of my community's life. I'm not getting paid by anyone. The growth, plus the margins, which are insane, plus the lack of debt, plus massive cash, plus the monopoly status, plus the massive demand in the pipeline, make Palantir into a unicorn. They are a unicorn, unlike any other company in the world. They're a premium. They're 1 out of 1. You're going to pay for that accordingly. Bro, AIP right now is exploding. Right now, 70% growth in US commercial. That's just AIP. We got 6 consecutive quarters of GAAP profitability. We've got 9 figures in cash, no debt. We've got endless government contracts. And the net dollar retention of Palantir is 120%. Means each client every year pays the same thing they paid last year and plus on average 20% more. Existing clients, not talking about all the new clients that are coming down the pipeline. 120% net dollar retention is insane. We're talking about a founder CEO who's never going to go anywhere. He is the company. His Class F shares also basically prevent from anybody ever fucking with this company. We got top tier talent. We have top tier culture. By the way, the stock-based compensation, that is why they have top tier talent. For all the naysayers, that is how you lock in top tier talent. They play really, really well with the cloud providers, with Microsoft, Google, Amazon. They play really well. None of them wants to compete. Microsoft kind of tried with Fabric and fell on their ass. It's a lesson for everybody else. Don't try to compete with Palantir. You're not going to win. Even Microsoft can do it. And basically, AIP gives you right now something insane. Decisions that took 6 weeks now take 6 seconds with AIP. You can hear it in every AIP con from CEOs who are saying this on stage about their company. It's not me making stuff up. You've got CEOs, go watch AIP cons. 6 weeks to 6 seconds. How much money is that worth? And that's just the tip of the iceberg. It's just the beginning. So what's the strategy here, Tom? Well, number one, the best time to plant a tree was a year ago. The next best time is today. Okay? Don't miss the next one. Whether the next one is Palantir or maybe there's another Palantir. Peter Lynch always said, waiting for a correction costs people way more money than the corrections themselves. So you're looking in the market, you look at the share price saying, oh my God, I'm going to wait for it. Okay. Use logic, not emotions. When I have a gut feeling about a stock, I go to the toilet. This is not about gut feelings. It's about numbers. It's about logic. Forget about this stuff. All these so-called experts. Just do the work, folks. If you're interested in Palantir, do the work. Read about Foundry. Read about Gotham. Watch AIP cons. Learn about AIP. Make a decision if it fits you. It's not a stock for everyone. The CEO is opinionated, is vocal. They're pro-Israel. They're pro-West. They're volatile as hell. They're not standard. A lot of noise around this stock. Do you want to own that? Is it suitable for you personally, that kind of a stock? If the answer is no, don't buy. Simple. Forget the share price. If it's yes, then slowly, DCA, slowly. By the way, if you are up big on this stock, if you've been investing with us for the past couple of years and you're up big, trim 30%. Trim 30%. If it continues to go up, you still have 70% in the game. And if it drops, you've already taken out 30% at the peak. You win no matter what. Okay? Just a suggestion, no financial advice. Do you? I'm just saying, what's the right risk management strategy for existing investors with a lot of risk, with a lot of built-in gains? I'm just saying, you got to be the lion here. What do I mean by being the lion? You DCA slowly right now when the stock is absolutely euphoric. When the stock drops, you pounce on it like the lion out of the bush. Just a couple of months ago, Palantir went from 120 to 65 to 70 and then back up to 120. You could have been the lion back then. Be the lion. Buy slow right now, stay in the bush, and when the opportunity comes, you can pounce on it and double down and use our 2x DCA system, which I teach in the academy. Now, talking about the academy, if you want to find the next Palantir, if you want to understand Palantir better, if you want to get ahead of 90% of retail investors, join Roik Academy, patreon.com/Tom Nash. Not done yet. I promised you something in this video, and I'm going to deliver. My price targets for Palantir for the next 5 years, 2030. Bear case, $472, 240% upside. Medium case, $695, 406% upside. And bull case, $918, 568% upside. A lot success, a lot of perfection is baked into these prices. I get it. Palantir is not for everyone. I get it. But if you want to learn more about the stock before you put a single dollar, please go do some research, watch previous videos, watch APCon, get some understanding about the stock. Does it fit you? Forget the price action, forget the noise. Be smart. I'll see you next one. Peace.